This week was a textbook example of how the market makers move price. We had the false move week beginning day trade, the 3 levels of rises into a week 3-day swing, and then midweek reversal that rolled us into 3 levels of drops, finishing into the weekend trap. We'll go through the week day by day so you can see how each session lined up with the TBD system, from the liquidity flush before the open on Sunday, through tricky Asia price action, right down to Friday's completion of the model. Remember, this isn't just about the charts. I'll also be tying in key updates and blogs, YouTube videos from Annii and Pedro, some of our cabin crew's setups, and community wins. By the end of this wrap up, you'll see exactly how the TTC crew traded through the noise and how you can apply the same system to anticipate these moves yourself. Hi, my name is Janet and this is Trade Travel Chill. If you're new here, welcome. If you're returning, welcome back. Be sure to hit the like and subscribe button so you can be notified each time we upload a new video. Let's get it. We came in off Sunday's liquidity flush, where the market cleared out anyone still holding long positions from Friday's big move. As the new week opened around Sunday 5 PM New York, the dead gap zone gave us our initial high of the day. Now we have to be cautious of the dead gap zone because market makers aren't yet on the clock, and this is where we can see whales manipulating price and causing volatility. This is why it is not the best time to open trades in the dead gap zone unless you are 100% confident. What I like to wait for is the Asia session to try and repeat that level but fail to break it, confirming the initial high of the day. And that's exactly what we got. So let me just zoom in. If we look at the Asia session, we can see price tried to repeat the level and failed to break the initial high of the day set in the dead gap zone. We had sideways consolidation for 30 to 90 minutes with inverted hammers showing you the initial high of the day was in and you were safe to open a trade. That there gave us a type 1 reset under the 50 EMA, and I covered this in detail on last week's wrap-up video. This then led us into the false move week beginning day trade. Now while that was happening on the charts, Jared laid out a clear weekly news roadmap highlighting the events most critical for us to pay attention to. He pointed out Tuesday's durable goods orders and consumer confidence, Thursday's unemployment claims and GDP, FOMC member wallet speaking in the US Asia gap, and then Friday's PCE release along with month-end flows. Alongside that, he reminded members in Discord that news is only ever the excuse. What really matters is where we are in regards to the pattern, the timing, and the levels when the news hits. He even gave an example from last week when algos rallied right as Powell's speech dropped. So if you remember from my weekly wrap-up videos, this is a good example of where this applies. This move is Powell's speech, big rally to the upside. However, we always put the model first, and you can clearly see we have a drop level 1 on the 1 hour time frame, drop level 2, and a drop level 3. So we were looking for a reversal before the news happened. The news is just the excuse to move price, and when you drop back to the 15-minute time frame, there was a multi-session W from UK into US session. You had to be quick to grab it, but that was the entry to catch the large move. So as Monday's drop played out, we already had the bigger picture map, not just which news events could be used as catalysts, but also how to line them up with the structure to be ready for the real move. On top of that, we also saw Pedro drop a YouTube video. He dug into BTC and Ethereum, but what I liked most was his breakdown of dominances and altcoins like Sol, ADA, HBAR, Link, XRP, Sui, Doge, and FXS. His point was simple. Even while Bitcoin was dumping, some alts weren't flinching, and that kind of divergence is a huge tell. It's the kind of thing we look for to anticipate where smart money might rotate once Bitcoin's levels are done. But the alpha doesn't stop there. We also had Jared share a blog on the TTC website. The big picture was this. Markets got excited because Powell and the Fed are hinting at rate cuts. But Danielle DiMartino Booth, a former Fed insider, pointed out that this pivot is really too little too late. The Fed has been behind the curve for months. They thought labour market was strong, but revised data showed job growth was far weaker than expected. If they'd known earlier, cuts would have already started. And that's the danger. Rate cuts aren't automatically bullish. If the cuts are happening because the economy is deteriorating, then they're a warning sign, not a green light. Think of it this way. It's like trying to put a band-aid on a crack in an Olympic-sized swimming pool. It might look like you're fixing something, but in reality, the problem is far bigger than the band-aid you're trying to patch it up with. She also pointed out the risk behind this pivot. The bond market might look strong with yields falling, but in reality, that often signals recession fears. Tariffs are another problem. They act like a hidden tax, cutting into company profits and eventually leading to layoffs. On top of that, consumer spending is weakening and fast, with credit card usage dropping harder than in any recession since the 1970s. Then you've got student loan repayments returning, which puts even more pressure on household budgets, and retirees losing billions in interest income every time the Fed cuts rates. That could force them to sell stocks just to cover living expenses. Even the housing market is showing cracks, with rising delinquencies and foreclosures alongside more rejected mortgage applications. And lastly, the US dollar. While everyone is shorting it, Booth warned that if Europe and other economies keep weakening, capital could actually flow back into the dollar despite Fed cuts. Her conclusion was clear. The Fed isn't cutting because they want to, they're cutting because they're being forced to by weak data. That makes the path forward fragile. For us as traders, the key takeaway is not to blindly buy into the idea that cuts equal a bull market. We need to stay tactical, align the macro backdrop with the TBD levels, and be prepared for volatility in both directions. So that was Monday, a false move week beginning that gave us a clean 3-level drop, paired with Jared's reminders about the news catalyst ahead, Pedro's insights on alt rotation, and Jared's macro blog putting everything into perspective. Moving into Tuesday, the picture started to shift. This was during my Asia live trading session where we humped for setup together in real time. Personally, I was looking for a W formation because I could see this vector candle here, and quite often what we find is price will come back to recover some of the vector candle, but instead price spent the entire day consolidating across the 3 sessions. Asia, UK and US. And what we ended up getting was a trapping volume formation. Within this consolidation, we can see price did pull back to retest one of our key levels, which was the low of the day. The low of the day is the lowest point price went to the previous day, which in turn gave us a rise level 1 for the 15-minute time frame. And while that move was happening, we also had Annii drop a new YouTube video where she broke down cycle management, showing how massive moves in liquidity levels can be read to position yourself better. She also tied an Elliott wave concept with the TBD system to highlight just how important timing and structure are for making decisions. She finished with a look at the dominances, giving traders a wider perspective beyond just the intraday moves. So Tuesday was all about patience. Price consolidated, trapped traders with volume at the lows, and then finally gave us that shift to the upside into rise level 1. Rolling into Wednesday, things didn't exactly pick up steam. Wednesday's price action was marked by more consolidation. Price looked weak, and even though we technically got a rise level 2 through here, the move didn't go anywhere significant. It was looking more corrective than impulsive. A member actually asked in Discord about the difference between impulsive and corrective moves and how that ties into the model. To explain it, I drew it out on a chart. An impulsive move gives you nice market structure. It's clear to identify where the higher highs are and the higher lows. When the higher low forms higher than the previous high, this is showing you strength in the move, and it's showing you that buyers are willing to step in earlier and are being quite aggressive, and you may not see deeper pullbacks. Nice move in this one here. However, with a corrective move, the highs are weaker. The higher lows don't show real strength, and the structure suggests the move is running out of steam. And that's exactly what we were seeing here. The model was still playing out, but the way they played out hinted at weakness and suggested we could see continuation of the overall bearish upward trend. Meanwhile, on the content side, Pedro dropped a new YouTube breakdown midweek where he revisited his bullish call on Crow at 7 cents and explained how he spotted the breakout before it happened. His reasoning behind Crow wasn't based on fundamentals or technical analysis. And this is something he highlighted in this call. He also went into detail on Trump's involvement through MCGA, Make Crow Great Again, and how they will become the largest holder of Crow. They've made a deal to lock up their holdings for 1 year, which is bullish because it prevents them from dumping on the market. Instead, when those tokens do unlock, they'll be released gradually on a drip-fed schedule that demonstrates a real long-term commitment and helps support Crow's price stability. He also touched on wider themes like speculation around a US-based crypto ETF and gave his thoughts on XRP, saying he doesn't think people are bullish enough on it yet. For him, XRP still has huge potential that the market isn't fully pricing in. And just a quick reminder, if you want to be trading these kind of moves in real time, whether that's BTC showing weakness or altcoins like Crow building strong narratives, you need a reliable trading platform. That's why we trade on WEEX. It's clean and fast and designed for futures traders like us. If you use the link in the description below to create your very own WEEX account, you'll be entitled to VIP 2 fees. That's about a 25% discount for life. That alone makes it worth signing up for. Thursday was the big turning point of the week. After 3 clear rise levels and 3 days of upward movement, the market lined up for midweek reversal, and it didn't disappoint. We saw a multi-session final damage M that formed right at the news event. This wasn't just a random setup, it was the model playing out exactly as expected. The M confirmed itself with price breaking below the 50 EMA with volume and even more importantly, breaking the center peak of the M formation. That shift in structure gave us drop level 1 on the 15-minute time frame, and from there the bearish momentum started to build. By Thursday, we weren't just guessing about a reversal, we had the pattern, the timing and the level all lining up, and the news was just the excuse to fuel the move. And it wasn't just BTC that gave us the opportunity. We also had Annii post the ETH short trade alert for the community, and it was textbook. Here are the details of his trade setup, giving the entry range, stop loss range, and his take profit levels, and the chart to go with it. So let's just run through his trade setup. With this strategy, we call it the bank the green strategy, where you secure partial profit at a risk to reward of 1-to-1, depending on your entry. From there, you manage the trade by moving stop loss to break even, or perhaps covering previous market structure. And then we have a second take profit and sometimes a third. If you had entered at the time the trade alert was posted, then your take profit levels would have been hit. You manage your trade by moving stop loss to break even. Now I can see Annii had his TP3 down at 4168 and price didn't quite make it there. And if I move across, it still hasn't been hit. However, anyone trading the TBD system can clearly identify the levels here. A drop level 1, a drop level 2, and then we have a drop level 3. Now, a lot of traders may have closed their positions at the end of the UK session because we know that heading into US, this can be a highly manipulated session where they're setting up for the weekend trap. So some traders may have closed their trades at the end of the UK session and taken the win. However, there may have been some traders who could clearly identify the levels here and waited for all 3 drop levels to play out. Then you would have banked yourself a nice 4-to-1 trade. So nice trade set up on that one, Annii, and hopefully a lot of our members caught this one. This is a reminder that the model repeats across assets. If you know how to read the levels, you can apply it to BTC, Ethereum, Solana, Link, or any other market. Because remember, this model originates from Forex. On the education side, Annii dropped her Thursday YouTube video breaking down how she approaches trading every time frame without needing to sit at the charts 24/7. She explained the difference between coin margin perpetual and delivery contract. and why she focuses on catching macro pivots first before worrying about intraday noise. It was a really valuable reminder that you don't have to overtrade. Structure is visible across all time frames if you know what to look for. Alongside that, SilverWolfs posted 3 blogs this week: the August altcoin report, Aptos vs Sui, the battle, and his deep dive on the crypto market outlook and altcoin. In this one, he talked about the emotions traders go through during alt season, the FOMO, questioning profit, worrying if you should have gone bigger. His message was clear: those emotions are normal, but structure always plays out the same way. He pointed out Ethereum hitting a new all-time high for the first time in nearly 4 years, which historically signals the start of aggressive capital rotation into altcoins. Bitcoin dominance rises first, then cools off. Profits rotate into Ethereum and Sol, and only after that do mid and small caps start exploding. He tied this to derivatives data too. Funding rates on altcoin perps have jumped to 4 to 6% per month. That shows traders are paying a premium to stay long on alt, literally putting money behind the belief that alt season is here. He also highlighted open interest surging across alts, with Ethereum futures around 23 to 24 billion, Solana at 7.4 billion, XRP at 3.9 billion, and others like Avalanche, Dogecoin, and Chainlink filling out the rest. That's a huge influx of capital positioning itself for more upside. SilverWolf didn't ignore the macro either. He noted inflation is still sticky, central banks are cautious, and Powell's talk of rate cuts in September gave markets an extra boost. But his closing note was simple: don't let FOMO run your decisions. This is just the beginning, and if you arrange your portfolio properly, you'll be in the green. If you don't, you'll just sit on the sidelines hoping to break even. Rolling into Friday, the drops continued. Friday kicked off with a retest of the 50 EMA. That retest proved the move, proved the change in trend, and confirmed the reversal, and gave us the confidence to expect continuation to the downside. Asia session delivered, giving us a drop level 2, setting up the model beautifully heading into the rest of the day. Then in the UK session, we got exactly what we expect on a Friday: the false move at the start of session before they run a trend, and then at the end of the UK session pull back against the move before handing off to US. With 2 drop levels in place, the model still had room to complete, and that's exactly what happened. US session gave us drop level 3, completing the 15-minute model and giving the perfect signal to close out any short. This is such an important lesson. Once the model completes, you don't want to be chasing new entries. If you're still holding, you risk getting trapped into the weekend when liquidity dries up. And it is during this move that Annii hosted a live stream on YouTube. She broke down Bitcoin's price action in real time, took chart requests, and covered alt setup. It was interactive, detailed, and the perfect way to end the week with education and analysis before rolling into the weekend. Before heading into the weekend, let's take a look at some of the community wins from the week. One that really stood out was 888's Crow trade, which was taken straight off Pedro's breakdown earlier in the week. Pedro had highlighted Crow at 7 cents, explaining the fundamentals behind the move, and 888 followed through with precision. That trade played out beautifully and showed exactly how the community can take content, combine it with the TBD system, and turn it into real results. And 888 wasn't the only one. Across Discord, we saw members locking in solid plays, hitting targets, managing their risks exactly the way we teach. These trades aren't just random wins. They're proof that when you stick to the structure and stay disciplined, the system works. We also had Stellar Drifter hit a short on BTC, locking in 39%, and Wayfinder with a solid short using 6x leverage, bagging 41%. We had Mark lock in 40% on a BTC short, Pickle Rick lock in $13,000 for the day, and MacD hitting a long on Mooding. Community wins like these are the best reminder that it's about all of us trading together, building confidence, and compounding results. Now, with the week wrapped up and profits secured, the market rolled into the weekend trap. From Friday 5 p.m. New York through to Sunday 5 p.m. New York, the market makers are off the clock. That means low volume, sideways consolidation, and liquidity building quietly in the background. It looks stable, but really it's just setting up the board for the following week. This is why we always call it the trap. Come Sunday 5 p.m. New York, the market makers step back in and assess where the liquidity is, whether they need to induce traders or stop hunt traders, or whether they have enough contracts to just shift price straight out. If open interest is dropping, it means traders are being liquidated. If open interest is rising, it means new positions are being opened. And if open interest is flat, this means traders aren't falling for it and they are not opening positions. Knowing how to read the open interest when price is in consolidation is going to give you the heads up as to what the market makers might do when the market reopens. This is why we never recommend getting too heavily positioned over the weekend. It's designed to lure traders into overcommitting right before the actual move begins. The play is always to protect profits from the week and be ready for the reset when Monday comes around. And this is where TTC really makes the difference, because it's not just about memorizing a strategy or following a set of rules. It's about understanding the whys and the hows behind what's happening in the market. Why do retail patterns fail when they look perfect? Why do they sometimes work? Why do these massive moves happen in the first place? And how are they engineered? Inside TTC, you're not just learning the technical side of the TBD system, you're uncovering the reasons behind the moves, the mechanics that sit beneath the chart pattern, and how it all ties together. For a lot of us, trading starts with curiosity. Maybe you heard about crypto from a friend, opened up TradingView and started doing your own research. That's where the rabbit hole begins. But there are always questions that don't get answered when you're out there learning alone. TTC gives you the missing puzzle pieces so the bigger picture finally starts to make sense. And the best part is you can choose how deep you want to go. We've got 2 memberships available, business class and first class. Business class gets you the full course library and access to the community. First class takes it a step further with live weekly sessions, real-time trade breakdowns and extra resources that give you even more of an edge. It's flexible depending on where you are in your journey, but both are designed to help you trade with confidence. The key is coming in with an open mind. Sometimes that means stepping back from what you think you know so you can really learn the system in all its depth. And once you've got it, you can start adding your own bread and butter setups back on top, but this time with clarity, structure and confidence. And look, if you jump in and you decide TTC isn't for you, no harm done. We've got a 48-hour money-back guarantee, no questions asked, no judgment passed. So really, what have you got to lose? If that clicked for you today, just wait till Annii drops her update in the next couple of days. She'll walk you through what to watch for as we head into the new week, higher time frame, key levels, and the next probable path the market might take. Because that's the thing, the market never moves randomly, but until you learn what to look for, it feels like it does.